Hello, I'm Dwayne Bishop. I'm the CFO Director for GPL Tax and Accounting, and I'm here today to talk to you about the Paycheck Protection Program. This program is part of the stimulus package that was recently passed and allows small businesses to borrow funds to be used for 8 weeks of payroll, rent, utilities, and some mortgage interest, and to have that loan either completely forgiven or converted into a 2-year loan at very favorable terms. Many of our business clients have been asking for help in understanding this program and making the decision about whether it's a good fit for their business. In this video, I'm going to be describing the program as we understand it so far and breaking down some of the details. If you have any questions at the end, please reach out to us at info@gplaccounting.com. So let's run through a basic example of how the program works. The first step is to calculate your maximum loan amount by taking your average monthly payroll and multiplying that times 2.5. In this example, we're going to assume a $50,000 monthly payroll amount, so that gives us a loan amount of $125,000. Now, the forgivable uses for this loan are payroll costs, rent costs, mortgage interest on business properties, and utility costs, all within a single 8-week period sometime between February 15th and June 30th of 2020. So in this case, once we've added up all those costs for our chosen 8-week period, we actually come up to only $120,000 of forgivable costs, and there's a $5,000 remaining loan balance. Some of our customers have expressed reluctance about taking on debt in this current environment. If that were to happen, and the amount of the forgivable costs did not equal the full loan amount, you would have the option to repay the remaining balance immediately with no penalty. However, if you elected to keep the loan, it would be at very favorable terms. There is a 2-year payment schedule at only 0.5% interest. There will be no payments for the first 6 months and no personal guarantee or collateral required. In fact, it's a 100% government-backed loan, so in the event of default, it would revert back to the Small Business Administration. In our opinion, it's the best possible loan that you could get in a time like this. So let's look deeper into some of the details of the program. The most important variable is your average monthly cost of payroll. To calculate that cost, you start with the included costs, which would be the wages, salaries, commissions, and tips of all your employees. However, these are limited to up to $100,000 on an annualized basis. Any earnings above $100,000 would have to be excluded from the costs. Also included are employee benefits. So this would include paid leave, health insurance costs, and retirement contributions. State and local taxes based on compensation are also includable. So that would be the Washington State Unemployment Tax and the Workers' Compensation Tax. Excluded from the payroll costs are federal payroll taxes. So that means the Social Security, Medicare, and federal unemployment on the employer's side. Also excluded are wages of employees whose primary residence is outside the United States, as well as any qualified leave wages that you get credited back to you according to the Families First Coronavirus Response Act. The average monthly payroll cost will be calculated using a baseline period. The default baseline period for existing businesses is the 2019 calendar year. For new businesses who are not in operation throughout all of 2019, they can choose to use January 1st to February 29th of 2020 as their baseline period. Seasonal businesses can elect to use February 15th through June 30th of 2019. So to calculate your monthly average payroll, add up all the included costs for your payroll period and divide it by the number of months in that period. You will also need to report your average number of jobs. Calculate this by finding the average number of employees per month within your baseline period and include full-time and part-time employees. Now let's look at some of the ways that the forgivable costs might be forgiven at less than 100%. First of all, they can be forgiven only up to the amount of the loan. If you spend more than the borrowed amount, you will not be reimbursed for excess costs. Also, if you reduce the number of your staff or significantly reduce their wages, the amount that is forgiven will also be reduced. For example, if you report 10 employees during your base period, but only 9 come back and work during the 8 weeks of the submitted period, you will only be forgiven for 9/10 of your payroll costs. So similarly, if you had 20 employees and brought back 15, you would be reimbursed for 15/20. Right? It's a proportional reduction in the amount that's forgiven. So in our example, where we were spending $90,000 on payroll to bring back all of our employees, if we only brought back 9 out of 10 and spent $80,000, we would then only be reimbursed for 90% of that $80,000, which would be $72,000 of costs that are forgiven. So in this example, we actually have $18,000 of additional loan balance at the end of the period, $10,000 fewer in payroll costs, and then $8,000 of those payroll costs that were no longer forgiven due to the reduction in staff. Similarly, if you reduce an individual's wages who was earning less than $100,000 in the baseline period by more than 25%, then the amount that you reduce their pay in excess of that 25% would also be deducted from the forgiven costs. To apply for this program, you will submit your application through an SBA approved lender. It is not an online application like some of the disaster relief programs. We recommend that you start with a banker that you know. If you have a connection either personally or through your work with someone in the commercial banking field, they will be able to give you much better help, more accurate information, and more likely to be responsive. From what we've seen, the chat windows, telecenters, and online options at the major banks have not been updated with this information and will not yield useful results. The application window starts April 3rd and will extend until June 30th. If you'd like to take a look at the sample applications that they've posted, there's a link here in this slide to the Treasury Department, where they can easily be found by Googling. If you still have unanswered questions after watching this video, you're not alone. Many things are still confusing about how the program will be administered. For instance, it's clear that if a business owner has paid themselves a W-2 wage, they can continue to pay themselves that wage and have that money be forgiven. But what about business owners who don't pay themselves a wage? What about guaranteed payments for partners, or the pass-through income that's so important for S-Corp and partnership owners? Also, people have asked, what if they hire back 10 people, but not the same 10 people that were there during the baseline period? These details and many more will be forthcoming. It has only been a short period of time since the bill was passed, and it can take months for an administration to iron out all the details of how a bill is administered. For now, we recommend doing the calculations to figure out your average monthly payroll and the baseline number of jobs for your baseline period, and then make a connection with an SBA lender. Find somebody that will be able to assist you with the application process. If you would like GPL's help in calculating your monthly average payroll and modeling out how the loan might affect you, please contact us at info@gplaccounting.com. Thank you.